type of products that a retail investor can typically trade these days range all the way from FX and FX options all the way to ETFs. I'll start with an ETF, very much an index-driven tracking share listed on an exchange that pays a dividend and really tracks anything these days, from water to the Dow Jones to various other markets, and very much the type of investment that we see as a passive type of investment that an investor can use if he doesn't specifically have a very specific view on an instrument, but has a macro view around what he feels a specific market might do. He's very happy to track a market in a passive style, buy and hold type of thing, and let it sit for a while. Rich?
Yeah, I think it's an important thing to note is that over 65-70% of the US retail market now invests solely in ETFs. I'm not saying we're going there, but that's an incredible statistic. The real value is that if you take something like the Satrix you're buying a basket of shares with one cost base. So what would it cost you to buy a little bit of 40 shares would be astronomical.
That's a good point.
And so you're sitting in a situation where I can get access to the MSCI World Index with one trade. I mean, it's fascinating. It's incredible. The touch of a button, I've got access to a wide range of products. So the other thing is you can obviously get a lot of ETFs. You are able to trade CFDs on the back of that. So if you want to come in and take a little bit more risk, doesn't only necessarily have to be a passive investment, but do I want to buy an index or do I want to take a CFD on the ETF that tracks that index? So it's really up to the individual investor to find his way.
Another instrument is probably one that most investors know, and that's stocks or shares investing. A platform like Saxo Capital Markets allows investors to trade on 31 exchanges globally. That's pretty much most stock exchanges in the world. And it gives you a great sort of smorgasbord, if you like, of investable universe in which to invest in equity trading, which most people understand.
Yeah, I think know when to pull the trigger on certain assets. Saxo is fantastic. I can sit with my base portfolio of 20 stocks as an example, and I suddenly see an opportunity that I want to take advantage of now. What would I do that? Would I do that in a stock? Let's say it was a UK listed share. I'd be paying 50 basis point stamp duty on that investment. So that's a great one. I'm looking at a 2-week horizon. Boom, I'm going to get into the CFD. You're getting access to gearing at incredible rates. What a fantastic product, So know when to get into certain products, know when to use them. It's sometimes not always about whether you're in a winning trade. It's your timing of when you get into that trade that's important. So know when to hold back and know when to be aggressive. And if you're going to trade. Don't sit there and think about it for 2 weeks.
CFDs are more and more an expanding asset class globally. We offer sort of 7,000 CFDs over individual equities, and this allows an investor who's got a slightly more risk-tolerant approach to the market, who's willing to put down 10% and fund the remaining 90% of his investment. And these are more active traders that get involved in this type of product. We have CFDs over the indices as well, so the guys who have a macro view and are looking at taking a macro leveraged play in specific markets, or as Richard alluded to, on ETFs as well, gives that geared exposure for the guys looking for a little bit more spice.
Yeah, don't be afraid to pay school fees in these situations with these things. CFD. If I have to hear one more acronym on the exchange, I want to know what's going on. But don't be afraid of it. You have to go to varsity on the stock market. You have to make mistakes. So don't go in there if you don't know the product. Go and just dive straight in. Have a play around, have a trade. The system's there to help you. There are educational tools. It tells you your margin in a live environment. So dip your toe in the water, get involved, and don't bet the house on one trade. Always keep a bit of the powder dry.
Futures are also available on the platform for the investor who wants a similar type of payoff profile, but he wants a more exchange-traded instrument. He's happy with expiries and paying for the funding up front. Very different model from a CFD, but same type of risk appetite. Those products are available on the platform.
And they're all interlinked. It's a great thing about the platform. I could take an option on an indices or on a future more specifically. So depending on that option and the way it's moving, I can actually hedge out some of my risk by trading the underlying future. So I'm holding a share. Okay, it's coming up to, there's certain tax legislations around how long you hold that share. I want to take some risk off the table for a short period of time. I can go and short a CFD. So use them, embrace them, integrate all your different products, because they all stem from one underlying feature. The market is the assets are commingled. So use that to your advantage. If you're sitting in a situation, you can actually hedge out your risk in the live environment with that market by using different products. So get to know a little bit about all of them.
Contract options are available, which allow sophisticated investors to put overlay structures over their portfolio to protect themselves against a lot of the risks, specifically if they're in geared positions or leveraged positions. Some investors use option strategies to collect premium while they sell options and buy another instrument. There's various ways to generate yield. We have bonds on the platform, which for a very, very passive investor who looks for just yield or coupon payment can invest online through the platform for that. So really, we provide what we think is everything to allow an investor to make an informed decision about what they want to do. They really just need to do the homework about their own personal preferences.